Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ken Shreve, and we have a breakdown of the market action for Wednesday, March 15th. And Ken, we had plunging yields again today and sellers hitting stocks. So it was a bit of a wild, volatile day as well.
Yeah, another kind of roller coaster day for the stock market. Nasdaq Composite actually eked out a very small gain by the close, and a nice day of outperformance for the Nasdaq 100. But financial stocks still under pressure. With the outperformance of large cap tech, let's take a look at Advanced Micro Devices (AMD). Also, want to take a look at Dow Component Salesforce (CRM), and finish up by talking about Duolingo, which operates a language platform showing strength in this very uncertain market.
Muy bien. Yes, tech definitely a bright spot right now. So we will get to that. But first, let's take a look at the major indexes. As Ken mentioned, the NASDAQ eking out a slight gain of about 5 points today, closing at 11,434 and change. On the downside, though, hit the hardest was the Russell 2000. So small caps with that financial exposure still taking a beating. So the Russell 2000 down 2.1%. Here is the IWM ETF. So down off lows a little bit. Also, the Dow today down 0.9% off its lows as well. And the S&P 500 finishing down 0.7%. So off lows, but I think a good look would be to take a peek at the intraday chart here. Ken, gap down at the open, sliding lower, coming up near break even, down again, surging higher, and a pretty strong finish here. It looks like, especially for QQQ here. It seems like volatility is still reigning supreme at this time.
Yeah, I mean we're still in a correction here. The third day of a rally attempt for the Qs here. Also a third day of a rally attempt for the Nasdaq Composite. So we did close nicely off lows. That's a good thing. There were buyers came into the market late when Switzerland said it would step in if needed to offer liquidity to Credit Suisse, which plunged below the $2 level today, and really it closed above $2, but you can see still down about 14% for the day. That fueled some positive sentiment, but still a weak session overall for a lot of financial stocks. We mentioned these bond yields that are still plunging as this flight to safety trade, money flowing into bonds. And it's kind of interesting because money flowed into bonds today, and we did get some buyers, lifting the market off lows. So that was a good thing to see. Now the 10-year note that we're looking at here, you can see it's really testing a key technical level here. 2 days ago, it came down to its 200-day moving average. Yields surged yesterday, and then they broke again today. So it's really kind of probing these support levels here. And if the yield can find some support here and start heading higher, that could help the market. So we'll continue to take a look at this chart, and also UUP, which I mentioned on IBD Live this morning. The dollar was strong again, but you can see it gave back some gains, still up 1% UUP, but we'll have to see if this 200-day moving average continues to be a resistance level. And if it is, some weakness in the dollar could provide some fuel for stocks here. But bottom line, we're still in a correction. Market still needs to prove itself more. Right. But seeing some decent action in some individual stocks, so that's good.
Yeah. And Ken, about the 10-year yield, it's so interesting how quickly the conversation has changed, because it wasn't too long ago that we were saying rising yields are hurting equities, but now we actually want them to come up a bit.
Well, yeah, because so right now the market is pricing in some rate cuts. Believe it or not, we were talking about the Fed would not pivot this year, and rates would not start to fall until 2024. But that narrative has completely changed. We're actually expecting a rate cut at the June meeting, so maybe a quarter point hike. next week, or maybe it's in May. But that pivot in June is looking like a sure thing, and there could be more than one rate cut this year because of this, the weakness in financial stocks and potential contagion and fears that more shoes are going to drop here. But yeah, the market was up strongly on Tuesday. We closed nicely higher with nice percentage gains, and you can see that bond yield was surging. So market wants to at least feel a little more comfortable that we're not on the cusp of a recession. The more bond yields plunge, it's just kind of a reminder that we could be in for some economic turbulence.
All right, let's take a look at some of the sector action today. Energy, really weak spot here with XLE down 5.3%. We have USO, which is a proxy for crude oil, breaking down in a big way after establishing a trading range over quite a few months previously, breaking sharply down below that with USO down 4.6% today to its lowest levels since early 2022 here.
Yeah, and if you look at zero COIL, just the front end contract for crude oil, which was down 5.6%, crude oil settled at just over $67 a barrel. You have to go back more than 2 years before you see oil trading at $67 a barrel. So the weakness in oil, again, just demand fears, fears of a worldwide recession, slowdown in Europe, slowdown in the U.S. That's going to curb demand for oil. And I have to say that even though we did close off lows today, there was a lot of damage in the market. The steel group, your steel producers, down almost 10% today. The group as a whole. You can see the VanEck steel ETF here had your several oil and gas related groups down 7 to 8%. The coal group down 7%. Airlines down 6.5%. So a lot of damage, in the market here. But it was encouraging to see a close off lows. But still want to just be cautious here and kind of let this volatility work its way through and see if we can get some sort of confirmation of a new uptrend. It could take a while, maybe not. We'll have to see.
Yeah, notable damage there, no doubt. Two other quick ETFs we want to check in on here is the Spider Materials ETF, down 3.2%. SMH chips have been holding up better than most and came off lows today. Down 1.1% on the day, still holding up pretty nicely there. And speaking of chip stocks, let's take a look at AMD, which broke out today 2 sessions ago, finding support at its moving averages. A day of outperformance on in yesterday's session, up 6.6%, and following up today with another 2.6% to break out.
Yeah, when that 10-year yield was surging and the Fed was hiking rates, was just starting their rate hike cycle. Obviously, that fueled a lot of selling in the Nasdaq, and a lot of these technology stocks really got taken to the woodshed here. So this lower interest rate environment now is bringing a bid to some of these large cap tech stocks. So we have Nvidia in the leaderboard model portfolio, but AMD is still a quality company, and it's in a good technical setup here. So does that mean you should buy it? Well, we typically don't like to buy stocks during a market correction.
Right.
However, we do like to pay attention to stocks that are bucking the trend and showing strength, attracting buyers when sentiment is negative. So AMD is just a really good looking stock right here. And like you said, it topped a buy point today. And showing nice relative strength, along with a lot of other semiconductor stocks here. We're not really seeing violent sell signals in the chip sector. Nvidia continues to be a very strong performer. So at least people that still want to slant bullish here can hang their hat on some outperformance by the Nasdaq here.
Yes, in a compelling outside week to the upside taking shape here for AMD. Let's also take a look at CRM. This is Salesforce in the enterprise software group. You can see a couple weeks ago, a strong move on earnings. And after a down week last week, it's up 5.6% so far this week. So holding up pretty well, all things considered, looking quite bullish while we're seeing a lot of other areas look quite destructive.
Yeah, again, just kind of looking at stocks that have pretty good fundamentals still, and you put Salesforce in that group, you can see nice annual earnings estimates. You know, profit up 36% in fiscal 24 and up 25% in fiscal 25. So strong earnings report was a catalyst for a nice move a couple of weeks ago. It declined the following week in light volume, and now it's just kind of retesting this buy area. So I would just take a look at the daily chart where we just were, and you can see the gap up faced some selling pressure when the market was rough, but Salesforce came right down to the 21-day exponential moving average, and it extended gains on Tuesday and held in there really well today. So based on that recent pivot, this one is still in a buy zone. That's that blue shaded area on the MarketSmith chart. But again, kind of hold off until the market kind of sorts itself out. I mean, we could be down 500 points tomorrow. We could be up 500 points. Need to see better clues for direction here. But Salesforce and other large cap tech looking pretty good here.
Well said, Ken. We'll round things out with a look at Duolingo. This is ticker DUOL. Nice move of its own on earnings, with it up over 22% after the report. It's been able to extend its gains and has found support at this round number at 120. So if we take a look at a weekly chart, we can see a stock that is turning around, but in a pretty big way. Maybe a little extended here, Ken, but this is definitely a stock not only moving in the right direction, but showing that relative strength as well.
Yeah, absolutely. Let's just go back to the daily chart here. First of all, this is a company. They provide a language learning platform. You can see the big breakout from that nice consolidation a couple of weeks ago when the company reported that 42% increase in revenue. Here's an example of a stock that's got the good revenue growth. It's not profitable yet, but it does have pretty good fund sponsorship. So it does check plenty of boxes, and the fact that this stock is holding on to the bulk of those gains after the breakout, we get some sideways movement here near this 120 level. Great one for the watch list. It's got a bullish relative strength line, got pretty good fundamentals, good fund ownership, and this stock, still could have leadership potential for sure.
And it is a relatively recent IPO coming out in the summer of 2021. So we always like to keep an eye on those new stocks too. And as you mentioned, not profitable yet, but it looks like perhaps it's moving towards profitability with smaller losses projected in the coming fiscal years. So we'll have to see what that profitability timeline looks like. Maybe they'll give an update in their next quarterly report, but impressive top line growth already, no doubt.
Yeah, and again, it's okay. I mean, typically we like to see that good earnings growth in recent quarters, but we've seen in recent years several stocks, a lot of new issues in particular that have that booming revenue growth. And the thing is that they're just spending so much time on research and development, and they're just putting their revenue back into the business, and that's what's happening here with Duolingo, and if you've got the good revenue growth and you've got that good fund sponsorship, those are two big things you want to look at for a company that's losing money. If the revenue growth is there and you're seeing increasing fund ownership, that's a pretty good sign.
All right. Well, thank you for your insights, Ken, and thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, so please join us, investors.com/IBD Live, for all the details on our daily morning live stream. We'll give you updates on our take on current market conditions. Things are really in flux right now, but IBD is there to be that voice of reason for you, with our experienced team giving their take on market conditions, how to handle portfolio exposure, stocks for the watch list, and so much more. So we'll see you in the morning, and we'll also see you right back here tomorrow at the close.